Are you ready? Are you ready to make some money? Welcome back to Stock Yoga, the only place where we stretch your mind and your portfolio. Looking for stocks to add to your portfolio? Here are 4, count them, 4 names to consider buying today. We're not just throwing darts at a board here, people. We've done the homework, we've crunched the numbers, and we've identified some serious contenders that could be ready to run. This isn't about speculation. It's about education. It's about finding solid companies with real stories, real catalysts, and real potential for growth. Now let's get down to brass tacks. The market is a wild beast, a bucking bronco, and you need a saddle to ride it. That saddle is knowledge. As of July 21st, 2025, the landscape is shifting, and you need to be positioned for what's next. We're seeing some incredible opportunities bubbling up, but you have to know where to look. Forget the noise, forget the chatter from the nattering nabobs of negativism. We're focused on fundamentals, on management, on the big picture. These are not just tickers on a screen, they are businesses, powerful engines of commerce, and we're going to break them down for you. So grab your notepad, get that thinking cap on, because class is in session. We're going to dive deep into 4 distinct sectors, from healthcare to utilities to retail. Why? Because diversification is your friend. You don't put all your eggs in one basket, not on my watch. We're building a portfolio that's as flexible and strong as a seasoned yogi. These are actionable ideas, but remember, I'm here to teach you how to fish, not just to give you a fish. Let's get to it. BOOYAH! All right, first up, let's talk about Centene Corporation, ticker CNC. Now, I know what you're thinking, healthcare. Isn't that complicated, Kramer? Yes, and that's where the opportunity lies. The complexity scares people away, but not us. We do the homework. Centene is a giant in government-sponsored healthcare. Think Medicaid, think Medicare, think the health insurance marketplace. These are massive, non-discretionary markets. People need healthcare, plain and simple. It's not a fad, it's a fundamental human need. And Centene is right in the thick of it, providing essential services to millions. This isn't some fly-by-night biotech with a prayer and a dream. This is a cash flow machine. The bears will tell you about regulatory risk, about reimbursement pressures. I've heard it all before, but look at the management team they've put in place. They are navigators, steering this massive ship through the choppy waters of Washington, D.C. with skill and precision. They are focused on operational excellence, on trimming the fat, and on delivering value not just to patients, but to shareholders. That's the kind of story I want to own a piece of. They are becoming a leaner, meaner, more profitable machine right before our eyes. Now, let's talk valuation. The stock has been beaten down, left for dead by Wall Street. The sentiment is terrible. And you know what I say? Terrible is good. It means we can get in at a discount. When everyone else is running for the hills, we calmly walk in and buy shares in a fundamentally sound business at a bargain price. CNC is trading at a valuation that just doesn't make sense given its market position and its earnings power. They're buying back stock, which tells you management believes their own shares are the best investment they can make. I agree with them. This is a turnaround story that is in the early innings. The market hasn't woken up to it yet. They're still focused on the old narrative. But we're looking forward. We see the cost-saving initiatives taking hold. We see the membership numbers stabilizing and growing in key markets. We see a company that is absolutely essential to the American healthcare fabric. Buying CNC today is a bet on smart management, on indispensable services, and on the market eventually coming to its senses. Don't miss the boat on this one. It's a conviction buy. Next, let's switch gears. From healthcare to utilities. I'm talking about PG&E, ticker PCG. Hold on, don't you dare touch that dial. I know the history, the fires, the bankruptcy, the headlines. It was ugly, folks, truly ugly. A pariah stock that nobody wanted to touch with a 10-foot pole. But that was then, and this is now. What we have here is one of the greatest turnaround stories in a generation. This is a company that has been through the fire, literally, and has emerged stronger, safer, and laser-focused on the future. Think about what PG&E is. They are the electricity and natural gas provider for Northern California. You know that little place called Silicon Valley? The engine of the American economy? They power it. This is not some optional service. This is the backbone of modern life. The demand is baked in. The company has made monumental investments in safety and grid hardening and burying power lines. They are spending billions to make sure the tragedies of the past are never repeated. This is a new PG&E with a new culture of safety and accountability at its core. The catalyst here is so simple, it's beautiful. They need to get back to being a boring, reliable utility. And you know what boring, reliable utilities do? They pay dividends. PG&E is on the cusp of reinstating its dividend. When that happens, a whole new class of investors is going to come flooding in. The dividend funds, the income investors, the pension plans that were forbidden from owning this stock will suddenly get the green light. That, my friends, is a recipe for a higher stock price. We are getting in before the dividend party even starts. Look, the risk has been dramatically reduced. The legal liabilities are largely in the rearview mirror. What's left is a regulated utility with a clear path to earnings growth, serving one of the most dynamic economic regions in the world. They have a monopoly on power. They are investing heavily in clean energy, in grid modernization to support the explosion of EVs and data centers. This is no longer just a recovery play, it's a growth story tied to the electrification of everything. Buying PCG now is a bet that the past is the past, and the future is bright, safe, and profitable. Let's move into a sector I absolutely love. Clinical research. We're talking about ICON plc, ticker ICLR. Who are these guys? They are the unsung heroes of the pharmaceutical and biotech world. When a big drug company wants to get a new medicine approved, who do you think does all the legwork? Who runs the complex global clinical trials? It's companies like ICON. They are a clinical research organization, or CRO. They are the brains and the muscle behind medical innovation. It's a fantastic business model. Think about it, the big pharma companies are outsourcing more and more of their research and development. Why? Because it's cheaper, faster, and more efficient to let a specialist like ICON handle it. ICON has the global network, the technological platforms, and the scientific expertise to manage these incredibly complex trials across dozens of countries simultaneously. They don't take on the binary risk of whether a drug succeeds or fails. They get paid for the work they do, period. It's a picks and shovels play on the entire biotech revolution. The demand for their services is absolutely exploding. We have an aging population. We have incredible scientific breakthroughs in areas like cell and gene therapy, oncology, and rare diseases. All of these new potential treatments need to go through rigorous clinical trials before they can reach patients. That means a massive, long-term tailwind for ICON's business. Their backlog, which is the amount of future business they already have signed, is at record levels. That gives us incredible visibility into their future earnings. This isn't guesswork, it's practically written in stone. And let's talk about their acquisition of PRA Health Sciences a few years back. It was a game changer. It created a true global leader in the CRO space. They now have the scale and the breadth of services to compete for the biggest and most lucrative contracts from the largest pharmaceutical companies in the world. The synergies are still being realized, meaning there's room for their profit margins to expand even further. This is a best-of-breed company in a secular growth industry. You want to own the best, and right now, ICON looks like the best. Finally, let's talk about something you can see and touch. Let's talk retail. Let's talk Lululemon, ticker LULU. Now, some people will tell you this is just a maker of expensive yoga pants. Wrong. That's like saying Apple just makes phones. Lululemon is not a clothing company, it is a cultural phenomenon. It has created a brand that represents a lifestyle of health, wellness, and aspiration. The loyalty of their customers is off the charts. People don't just buy Lululemon, they join a community. That is a powerful, powerful moat. The bears have been growling about a slowdown in North America. Okay, fine. The growth can't stay at stratospheric levels forever. But they are completely missing the two biggest parts of the story: the international expansion and the men's category. Lululemon is just scratching the surface in Europe and Asia, particularly in China. These are massive markets with a burgeoning middle class that is hungry for premium, aspirational brands. The international growth runway is enormous and will power this company for the next decade. And then there's the men's business. This is their secret weapon. For years, it was an afterthought. Now, it's a multi-billion-dollar business and it's growing like a weed. They've figured out the formula, creating products that men actually want to wear, both in and out of the gym. The ABC pants are legendary. This isn't just about athletic wear anymore, it's about everyday wear. They are taking market share from everyone. This diversification into new geographies and new demographics makes the company so much stronger and more resilient. So when I see the stock pull back on fears of a domestic slowdown, I see an opportunity. I see a chance to buy a best-in-class global growth story at a more reasonable price. The brand is stronger than ever. The innovation pipeline is full. They're expanding into footwear, into new categories, constantly pushing the envelope. Management has a clear vision and a proven track record of execution. Don't bet against a brand with this kind of cult-like following. Lululemon is a long-term winner, and this pullback is a gift. There you have it. 4 fantastic companies with 4 very different, very powerful stories. Centene, the healthcare turnaround, PG&E, the utility comeback kid, Icon, the brains behind the biotech boom, and Lululemon, the unstoppable global brand. These are the kinds of ideas we love to uncover. Companies with solid fundamentals, clear catalysts, and excellent management. We've laid out the thesis, we've given you the homework, but now the real work begins. This is where you have to take the baton and run with it. Remember, I am not your financial advisor. My job is to educate, to entertain, and to get you thinking about the market in a new way. It is absolutely crucial that you do your own research and consult with a financial advisor before making any investment decisions. Dig into these companies' quarterly reports, listen to their conference calls, and understand the risks involved. Never, ever invest in something you don't understand. Knowledge is your best defense against making foolish mistakes. Be a student of the game, always. This is how you build long-term wealth. Not by chasing hot tips or getting scared by headlines, but by patiently buying wonderful businesses at fair prices and holding them for the long haul. It takes discipline, it takes patience, and it takes a little bit of yoga-like flexibility to navigate the market's ups and downs. Keep learning, stay engaged, and never stop doing the homework. That's the secret sauce. Now go out there and make some money. Happy investing!